Hello everyone, and welcome back. My name is Greg Furman, and this is the VantagePoint AI Market Outlook for the week of June the 1st, 2021. Now, to get started this week, we're going to begin where we always do with that very important US dollar index. Now, this coming week is a make or break week for the dollar. It is going to be heavily data dependent on the non-farm payroll number to see if the labor market's actually improving in the US. Will the Fed start to loosen its grip on the market and start again, even just think about raising rates here or changing their opinion? But that's a whole nother session in itself. Now, again, this outlook is primarily based on the VantagePoint software. You can add additional tools that you may be using, financials, wave theories, a number of different other tools that you can use, but this is predominantly using the VantagePoint software in its forecast. Now, when we look at the dollar, we've had a move up. As I stated in last week's weekly outlook, I anticipate the dollar would strengthen by the end of the week as we look at these cycles in the dollar. Now, in most cases, the cycle in the dollar is strong at the end of the month into the first week of the new month, but we do not see this cycle in July and August. That cycle of dollar buying will likely resurface back in probably in September again, but for now, again, in the month of June, that dollar buying cycle has been accurate about 70% of the time. So we've already seen a big spike down in the euro on Friday. Gold is holding its value. But again, when we look at the dollar, the exact failure point is 90.22. Now, as the dollar comes up and attempts to break through that vantage point level, we had a significant failure going into the end of the trading day, closing the day at 89.99. Now, we've held above this yearly opening price the entire week. You can see the bulls and the bears are fighting it out pretty heavy right around this yearly opening price. A clean break of 89.90 will see this go much lower. Now, some of the tools, different tools that people use, somebody had stated on here giving Elliott Wave forecast. When we look at dollar institutional buying, that's almost impossible for something like Elliott Wave to forecast that because you've got large institutional funds that are required to buy dollars. Governments, hedge funds, settling trade balances, all of these things. And usually these orders come in when the dollar appears to be at its weakest, when it appears there's going to be a breakout. We saw this past week with the euro US pair. As it broke above the yearly opening price at 122.38 was an absolute bull trap up there. We'll look at that in a minute. But for now, I believe we are coming into a holiday short week. The ADP report is pushed out till Thursday. Then we have the non-farm payroll number on Friday. We are going to see a very, very volatile week. Now, in last month, when the US was supposed to come up with about 1 million jobs and only came up with 240,000, we saw a spike in gold prices prior to that number being released. We actually saw that spike on the Tuesday, which I found very, very odd. So I would advise everybody to keep a very close eye on the correlated markets this coming week to see if there's anything kind of funny going on there, because I believe that number was leaked before that, and that's why money was moving out of the dollar and into gold, when in most other cases in that particular week, you've got institutional buying. So if we can clear 90.22, the dollar may come off, but either way, the dollar usually does not have a great month in the month of June. So when we click on our F8 in our VantagePoint software, we do have a 2-day close above the long predicted. Now, this is a 2-day rule that I've often discussed at some of the seminars in Tampa and the VantagePoint live training room. I don't like to bite on the first time we move above this. I want confirmation that we're holding above this. So our support for the dollar comes in at 89.94, the yearly opening price at about 89.80. We know exactly where our support is, but we must break through the 90.22 area. Our neural index is positive, but we are not holding above 50 or the 60 level on the predicted RSI. The predicted differences are rising and they're pointing upwards. So these are all good signs that the dollar will strengthen next week, at least up until the Thursday prior to the non-farm payroll number. Now, when we look at the stock market going into next week, yet another new triple EMA cross from VantagePoint. But we do have very stiff resistance on this verified high at 42.38. We must break through this level if the equities are going to continue to move up. I believe it's unlikely that that's going to be next week, but it could be the week after if we get a payroll number. Now, the signal to watch here on stocks, where I could be wrong, and we could be moving lower, is we do have the medium term crossing the long term predicted difference to the downside. But it's not with the neural index. We need the neural index to be in agreement with the MA diff cross. If that completes, then we would at least have a retest back down to the 4170 area. Now, again, when we use that predicted moving average by itself, we'll be looking for the S&P 500 to hold above 4190 to confirm it's still bullish. But that very ominous verified resistance high at 42.38, we need to get through that very, very soon. Now, as we look at some of our main commodities, starting with gold, now, arguably, there could be a seasonality in play here, but part of that seasonality, I would also argue, is that we don't have a dollar buying cycle in July and August. And I'm simply putting that out there, that could be one explanation for that seasonality, is that there isn't dollar demand around at the beginning of July and the beginning of August. Dollar demand buying dries right up. So that could assist this. Now, if we get a poor non-farm payroll number on Friday, you can pretty much take it to the bank that gold's going to blow through the yearly opening price. But as you can see, once again, we had a false break above 1904, the yearly opening price, only to retreat back inside of it, but a very, very shallow retracement here, guys. When we look at this, we're holding along the Vantage Point T cross, the medium T cross. When we click on the key Vantage Point level, our T cross long, 1862. Longs are still in play in gold while we're above that level. When we click on our F8, you can see gold continuing to hug this along. We broke down below this, but this guys, is intraday noise, okay? Because we broke down below that predicted moving average, we did not break down below the T cross long, and we did not close below this blue line. Using that predicted moving average by itself, you can see that it's a highly effective entry point. So when we look at gold to start the week, our predicted low on gold is 1895, and our T cross long, or excuse me, our long predicted is also at 1895, making that a very reasonable entry point for a long trade. Now, the only downside to that potential long trade is the time of the month that we're in. Because remember, when we look at all of these conventional theories, Gann theory or Elliott Wave. Elliott Wave is largely based around, impulse buying and selling, but we're not dealing, an institutional flow of dollar buying is not impulse buying or selling or retail traders. It's institution. It's a blind order that starts coming into the market that most retail traders don't see. So that could cause gold to pause out here or maybe pull back towards that 1862 level prior to the market actually getting ready to advance the other way. So we want to make sure we're being very, very cautious around that there's a bull trap or a bear trap forming in that particular area. And again, for now, gold remains along for the time being. Now, as we look at oil going into next week, once again, oil is getting very, very toppy up at these particular lofty levels. So when I look at the oil contracts, again, we've got some strong verified resistance up there. And that particular resistance is coming in on this swing high, that high at 67.02. So we don't have a lot of buyers up here at the current time, but the Vantage Point indicators still remain firm that oil is going higher. So we can see we've got our medium term crossing our long term predicted difference. Our neural index remains a solid green. We're holding above our T-cross long at 65.21. But the one you really want to watch here, guys, the key level is 66.13, the long predicted. You can see that the market is using that Vantage Point predicted moving average as a pivot point to actually for buyers to come back in. We continue to make new highs, but we've got to close above that swing high at 67.02 if we're going to have any shot whatsoever of taking out this additional swing high at 68.11. Now, a lot of heavy resistance in here, and I believe that 68.11 ultimately either way is going to hold. Now, as we look at one of my favorites here, Bitcoin under pressure again this week, a lot of back and forth with this, but once again, with Bitcoin, we remain firmly above that yearly opening price at approximately 29,000. We had a big sell-off almost right down to that level, only for the market to turn around and go right back up again, but we're not clearing these key vantage point levels. The T-cross long, 42,338. One of my favorite plays here. Two ways we can do this, guys. We can stay out of this chop down here and put our limit orders to buy this at about 42,350, or in the alternative, again, one of my favorites is putting limit orders just above the long predicted at 37,984. So at approximately 38,000, a buy limit order is sitting up there, but this particular level here, this verified high at 4077, is a little concerning to me. So again, I think I would be, if I was using that straddle strategy, I think I would be more inclined to use the about 40,750, 40,780, somewhere around that area. Because if we can clear this verified resistance, then we should move higher. But the Vantage Point indicators are not overly supportive of further longs on Bitcoin at this time, as our neural index is down. We've had a failure at the 50 level on the predicted RSI, and the predicted differences are starting to flatten out and potentially getting ready to turn to the downside. Now, as we come into some of our main Forex pairs here, once again, we start at the top of the food chain here, the number one traded Forex pair, Euro US. Now, I warned everybody in last week's weekly outlook of a bull trap being set up here. I believe that there is still a strong possibility that the euro can move above the 122.40 area in the month of July and August. But it needs to get moving, and it needs to get moving very fast. Now, this move will be completely data dependent. If we get a very, very strong non-farm payroll number, that should hammer the euro down. But you can see what they're doing to you here. On Wednesday or Tuesday and Wednesday, I believe it was Tuesday, they pushed the euro all the way up to a high of 122.66. But you remember what I've also stated, that we're looking for that two-day close above the yearly opening price, then a move off of that level, a retracement back to 122.40, and then we're going to go higher, probably towards the 124 area. But we're not getting that at this time. We've basically, what they've done is they've purged the market of any longs up here, and this is a classic broker bait and switch here. What this often happens here is that they flush out all the longs when they drive the market lower, wipe out all the stops, then the brokers get long themselves on this and make money. So there's a very strong possibility that that level is going to be breached again. We've had a strong, actually, believe it or not, we've had a strong close on Friday. Not strong close, but we've come back to at least where we opened, and that's again, finishing off the day is pretty impressive there, because we did end up closing out at 121.91 after a pretty significant sell-off all the way down to 121.33. Now, the indicators from Vantage Point are mixed here, but again, the predicted differences are down, the neural index is down, our RSI is at 49.6, but remember, we've got the Memorial Day in the US on Monday, a holiday short week. Be very, very cautious with this pair until at least Wednesday. Once the market has had a chance to settle, or even midday Tuesday, once all markets are back in and we see if we've really got buyers on the euro or not. And once again, with this pair, keep a very close eye on gold contracts. If gold does not hold this level, the euro is absolutely going lower. But if gold does break out to the upside, you want to get long the euro pretty quick, and I would watch this 121.56 area very closely. That's the line in the sand for us between bullish and bearish. When we click on our F8, you can see that this is very ominous here, that we've closed below that long predicted 3 days in a row, but we must breach the Vantage Point T-cross long if short trades are actually viable. Now, if we're looking at places of value to buy dollars during a period of known dollar strength, US Swiss franc is always at the top of the list because the Swiss franc is a very low interest rate against the US is not a high interest rate, but it's much higher than the Swiss franc. So what we're doing is looking for a break of 90.20. If we can break above 90.20, we have four staggered levels of resistance that go all the way up to the high of 91.81. I believe we have a real shot of getting up to that level by Friday, but I also don't believe that we'll likely hold up there for very long. The Tuesday after the non-farm payroll number, in most cases, the dollar sells off either way, but in mid to late June, the dollar is at an even bigger susceptibility of a sell-off. So keep that in mind. But the immediate move here is definitely up. Our medium term crossing our long term. Predicted difference, neural index is positive, rising RSI. When we click on our F8, we've also managed to close above this. So to start the week, the level that I would watch very closely is 89.82. If we can hold above that, longs will definitely be good for at least 3 or 4 days here, guys. Now, the same thing would apply to the dollar yen. You can see that both, and this is very strange because as I've often said, I've seen the US dollar and gold move up and down together for upwards of 2 months at a time over the many years that I've been doing this. But this is odd that gold is moving up and US Swiss franc is moving up and dollar yen is moving up because usually when gold is strong, so is the Swiss franc and so is the yen. So we may be just on borrowed time with these longs, but the yen did make a very strong move up on Thursday. Little bit of follow through on Friday, not the best. We've just got to get above this verified high at 109.96. If we can get above this area, then the dollar yen should move aggressively higher. But if we get a bad non-farm payroll number here, guys, and again, we're in a, I'll keep saying this, we're in a week where we're data dependent, right? We'll be back at 109.13 in a heartbeat. And again, keep an eye on rising gold prices because they could be the trigger that we're looking for to actually set shorts, reversal shorts on this particular pair. Now, once again, with the pound dollar here, the pound is just simply unable to breach this 142.40 area. So this is, if we think of it in Forex in its basic terms here, which is buying or selling US dollars in places of value, to do that, let's assume that the euro does go higher. But remember, if the euro goes higher, euro Great Britain is going to go higher. So they're going to be buying euro US and selling Great Britain US. Now, if that's the case, then and we're in a period of known dollar strength, a short up around 142.40 could be a very, very good short-term play just for the week. So again, watch for a breach of the 142.33 area by about, I'm guessing, 30 to 50 pips. And then a violent reversal, much like what we saw on Euro US on Thursday. I would be willing to bet that that's what actually happens because the powers that be that need to buy dollars, they're looking for places of value to do it. And this very well could be a place for that. So watch that level very closely. Currently, we do have an MA diff cross to the downside, which is a good thing. Our neural index is still up. But our RSI is telling us we have very, very little momentum here. Now, if we click on our F8 on this one, you can see that we're on either side of this predicted moving average. We are not in a trending move. We are basically at a standstill. So we're looking for it to either hold above 141.72 or hold below 141.72. That's the play here, guys. So pick your poison. My view is that there's going to be more pressure to the downside than the upside just for this coming week. Now, as we look at one of my least favorite pairs these days, which is the US Canadian pair, continues to grind lower, and for reasons that are simply it's very, very odd. As I've stated many times, Canada, for the most part, is still in lockdown. We're not doing that well with COVID at all compared to the US and some of the other countries. So, but the Canadian dollar got a huge boost of strength based around the comments from the Bank of Canada that they plan on raising interest rates before the US. I don't believe that that is what will happen one bit. I believe the US will raise rates long before Canada will. And Canada is going to be, they're going to have to leave rates because again, our economy has been shut down for well over a year here. We've had bits and pieces where we've opened up only to close down 2 weeks later. So once again, we've got heavy support building down at the 120.12 area. In my respectful opinion only, longs are viable while this support holds. Our predicted differences are in a very sneaky way, are rising above the zero line. And again, this is why we use alternate indicators measuring two different markets, meaning the medium term crossover and the long term crossover is built in to these predicted differences. Now, our neural index is still down, but very often when I've seen this reverse check mark like this is usually a warning sign that this move to the downside has peaked, and that's about it. So we're looking for a reversal. I would like to see us break and hold above 121.34, and then we should be good to go for longs. Now, when we click on our F8, you can see if you want to get closer to the fire here, that pivot level is 120.80. I will argue that if we can hold above 120.80 by Wednesday, we have a real shot of taking out these two verified resistance highs. So again, keep an eye on these key Vantage Point pivot levels and know how to use them in your trading. With Aussie US and New Zealand US, the New Zealand is the winner between these two, and that's largely based around the sell-off on the Australian New Zealand pair. But right now we're coming into a strong verified support low. That's coming in at 76.75. We also have the yearly opening price on this pair, by the way, around the 77 mark. I believe that ultimately going into July, August, and September, that the Aussie and the New Zealand will outperform. I believe that they will ultimately hold above their respective yearly opening prices and advance from there. But we must get through this choppiness. So right now, the support low 76.75, the additional heavy verified support level is coming in at or about the 76.26 area. That's your buy zone, in my opinion, because we're pretty confident that the dollar is going to strengthen for most of this coming week, but we're also pretty confident the dollar will sell off a week Tuesday after the non-farm payroll number, regardless whether it's a good number or bad. That's the pattern that I've seen form. Then we go into the seasonality, if there's a seasonality in gold at that time, that'll put additional pressure on the dollar. So there's a lot of things that are building up against the dollar here in short, and we would watch the same thing. Always remember the Aussie and the New Zealand, for the most part, is a very similar trade. So when the dollar came up with that strength on Friday, it really hammered these down. But again, that's a lot of that is profit taking going in to a holiday long weekend. These same traders that were holding longs the entire week, they're taking profit because they know there's a holiday long weekend in the States, but they're likely going to be looking to go in and get long again when they come back in on Tuesday. So late day Tuesday, early Wednesday, look for a reversal higher on Aussie US and New Zealand US. It's entirely possible. So we have a very busy week here, guys, and a very choppy week, to say the least, with that payroll number, because that is going to set the tone here for the remainder of this quarter, going into going into September. So once again, this is the VantagePoint AI Weekly Outlook for the week of June the 1st, 2021.